as we step into 2025-26, it's exciting times because we've seen 2020, 2021, 2022, 2023, 2024, and we've also seen a very, very sober early 2025. So as we step into 25-26, what are the strategies as an investor we should be adopting to? Let's discuss that a little bit today. So before entering into any of the further discussions, let's make it clear that all the information which we share is purely for informational purposes only. Okay, so with that spirit in mind, so बहुत simple सी चीज़ है. ये कहा जाता है कि आपका दिमाग, आपका दिल या आपकी एनर्जी आपको उसी डायरेक्शन में लगानी चाहिए जहां पे आप भविष्य जुड़ा हुआ है. सो विद दैट स्पिरिट इन माइंड, व्हाट वी आल्सो एडवोकेट इज लेट्स फोकस ऑन थिंग्स एंड लेट्स पुट आवर एनर्जी इनटू थिंग्स जहां पे हमारा फ्यूचर बसा हुआ है, जहां पे हमारे को फ्यूचरिस्टिक में कुछ गेन्स हो सकते हैं, वहां पे हम फोकस करते हैं. एंड टुडे इज दैट टॉपिक फॉर अस. सो एज ए इन्वेस्टर आपको ये फोकस करना है, आपको यहाँ पे एनर्जीज लगानी है कि आपके अपने खुद के एग्जिस्टिंग इन्वेस्टमेंट्स या आप जो फ्यूचरिस्टिक में आप करने वाले हो, कहाँ पे कौन से ऐसे फाइनेंशियल प्रोडक्ट्स हैं जहां पे आप इम्प्रोवाइज कर सकते हो एग्जिस्टिंग इन्वेस्टमेंट्स को, और probably you can put your money at work in a better, more efficient, in a more profitable manner. प्लस आपके जो इन्वेस्टमेंट प्रोडक्ट्स हैं, फाइनेंशियल प्रोडक्ट्स हैं जहां पे आपने इन्वेस्ट कर रखा है, इफ दे आर नॉट एडिंग वैल्यू टू योर फ्यूचर सेल्फ, देन प्रॉब्ली यू कैन स्केल इट डाउन और प्रॉब्ली एलिमिनेट देम ऑल टुगेदर. कोई ऐसे फाइनेंशियल प्रोडक्ट्स, आर देयर एनी फाइनेंशियल प्रोडक्ट्स or probably any quality benefits features which you as an investor can invest in the current times which you have not presently having in your portfolio? वो भी एक चीज है देखने लायक जो आपको इस फाइनेंशियल ईयर देखनी चाहिए. प्लस हम उसको इन्वेस्टमेंट ऑडिट भी बोलते हैं कि आर यू अंडर एलोकेटेड और ओवर एलोकेटेड टू अ पर्टिकुलर फाइनेंशियल प्रोडक्ट. इट कैन बी रियल एस्टेट, इट कैन बी डेट, इट कैन बी इक्विटी, विद इन इक्विटी इट कैन बी अ पर्टिकुलर स्टॉक, पर्टिकुलर म्यूचुअल फंड. सो इट्स टाइम you do that under allocation or over allocation exercise and make necessary changes. सो ग्लोबल मार्केट्स हो, डोमेस्टिक मार्केट्स हो, फ्लोज की हम बातें करें, आने वाले क्वार्टर रिजल्ट्स की हम बातें करें, व्हाट्स द हाई, व्हाट्स द लो ऑफ मार्केट्स, वैल्यूएशंस क्या है, ये सब थोड़ी बहुत चर्चा करते हैं एज वी मूव इनटू 2025-26. इट्स वेरी वेरी इंपॉर्टेंट टू हैव द राइट नॉलेज विथ यू टू एक्चुअली मेक इन्फॉर्म डिसीजंस. सो थोड़ा बहुत हमारे पास ये फेब एंड तक का डेटा है. सो वी आर क्लोजिंग ऑन मार्च एज वी स्पीक. सो यहाँ पे आप देखोगे कहीं ना कहीं मार्केट कैप्स जिसे कहते हैं, जो मार्केट कैपिटलाइजेशन, टोटल नंबर ऑफ शेयर्स इनटू द शेयर वैल्यू ऑफ द लिस्टेड स्टॉक्स. तो निफ्टी 500, निफ्टी 50 का मार्केट कैप इन ट्रिलियन आईएनआर ट्रिलियंस अगर आप देखोगे सितंबर 2024 में व्हेन द मार्केट पीक्ड, सो वी वर एट 209 ट्रिलियंस एंड नाउ वी आर एट 179. दैट इज फेब एंड का डेटा है. एंड यही एक साल पहले फेब 2024 में देखोगे तो वी वर एट 178. So here the interesting part is the P ratio. The P ratio was at 21.1 in the month of Feb 2024. Then it peaked out to 23 times, and now it's sobered down to 18.6. So it peaked by 17% from Feb 2024 to September 2024, and then it bottomed down to 18.6 by approximately falling down by 15%. And the market cap remained same. Earnings kind of became little more decent. Similarly, in Nifty 500 market cap, if you see, we were at 427 lakh crores. That's in trillions, 427 trillions. Earlier we were at 350 in Feb 2024, and as we speak at the end of Feb 2025 we are at 349. The P ratio from 21.6 peaked to 23.7, and now it's to 19.3. Something very similar you can, and it was down by 18%. You've seen a sharper fall in the Nifty mid cap 100 and the Nifty small cap 100 market cap. Earlier it was 54 in May 2024. It peaked to 67 trillion, up by 24%. The P ratio shot from 30.3 to 34.8, and it is now down to 27.2, almost 20% down as on Feb 2025. The market cap remains the same in last 1 year. Similarly here, from last almost 10 odd months, 10 to 12 odd months here, from December 2023, we were at 17 trillion small cap. It rose by 40% to July 2024 to 23.9, and then it fell sharply by 28%. The P ratio we're talking about, as well as the market cap, it fell down to 20x, which is at Feb end data. So obviously the fall was much more sharper in mid cap and small cap. What does it denote, and what are you supposed to be doing? We'll just talk about it in a bit. But some more data or some more statistics to make you a more knowledgeable or informed investment decision maker. So from Feb 2024 to October 2024, we saw 51% stocks which were up almost between 20 to 40% and 40%. To be specific, 135 stocks out of 500 stocks, they gave more than 40% returns between the Feb 2024 and October 2024 peak, and 117 stocks were up by 20 to 40%. While between 0 to 20%, there were 142 stocks. And in this up cycle also, there were few stocks which were laggards, and it actually fell down by 20% during the peak, which is almost 78 stocks by 20%, and between 20 to 40%, almost 19 stocks. And there was one stock, not to name that, which fell down more than 40% between the Feb 2024 to October 2024 peak. Fast forward to October 2012, Feb 2025, none of the stocks were up by 40%. Only two stocks were up between 20 to 40%. 30 odd stocks were up by 0 to 20%. Almost 145 stocks out of the 500 stocks fell by 0 to 20%. And between 20 to 40%, 275 stocks and 48 stocks fell more than 40%, which is almost 65% of the stock market within the 500 stocks fell more than or between 20 to 40 and more than 40%. So that's the crash which we saw between October 2024 and Feb 2025. Now, the other slide would have given you a flavor that, okay, fine, everything is crashed, everything is over, but there comes the importance of index investing or basically the Nifty investing. Now, the Nifty shows us a very positive figure or a positive side to crashes or corrections. You've seen that from 2008 right till 2025 as we speak. So in 2008, specifically between 8 January 2008 till 2027 to October 2008, the Nifty kind of declined by 60%, and then it again recovered by 5th November 2010, where it formed an all-time new high, and it almost rose by 150%. It declined by 60% and then it rose by 150%, and it took almost 739 days. Interesting data. And then if you see collectively between 2008 till 2024, each time whenever Nifty fell, it has recovered sharply within an average time period of 200 days. Sometimes it has taken as low as 69 days, that is in 2019, and as high as almost 2 years, which is in 2008. So now we sit at 2024, that's the September 2024 peak, which saw at 26,216, and we are hovering around 22 to 23,000 as we record this video. So probably down by 16% from its maximum height or maximum, you can say, peak. Now, how many days it takes to recover? It can be 6 months, it can be 12 months. So we are almost 6 months away, 6 months down, which is from September 2024 till March 2025. We complete 6 odd months. So we'll have to see whether it recovers within the 200-day average or it takes longer. But the good part is it does recover and it does form a new all-time high. When? Nobody knows, but it will form a new all-time high very, very soon. A soon definition can be 1 quarter, 3 quarters, 6 quarters, that the time will tell. Now, another thing which we have seen is that from almost a decade, last 10 years, somebody who chose between equity and gold. So you would have seen your gold investments almost faring better than your equity investments as far as Nifty 50 is concerned. And globally, in the last 10 odd years, from Feb 2015 till September 2024, we've seen Nasdaq, Mid Cap 100, S&P 500, and Small Cap 100 outperforming gold, and Nifty 50, emerging markets, and China have barely or rather underperformed the gold investments. Similarly, from September 2024 till Feb 2025, gold has actually been an outperformer, and it's the best asset class as compared to others like Nasdaq, which is the US IT, you can say, index, mainly S&P 500. China market has just tried to give a, you can say, positive rally or a smart recovery from its recent times. Maybe the FIIs are now shifting towards China. That may be the case. Emerging markets are still in red. Nifty 50 is in red. Mid Cap 100 and Small Cap 100 are also in red from September 2024 till Feb 2025. Other part of it is that from Feb 2015 till Feb 2025, so almost a 10-year tenure, again, you see gold being an outperformer as compared to a Small Cap 100 and Nifty 50. Only the exception being Mid Cap 100 and S&P 500 and Nasdaq has outperformed gold. Other than that, gold seems to be the winner in terms of a 10-year history. The market cap to GDP, which is actually very, very famous, it's also called the Warren Buffett indicator, where we've seen that the average market cap to GDP is almost the average we've seen close to 80, 85. So that's the 85% thing. We've seen the lowest in 2007, and then in 2020, the recent peak which we saw in September 2024, which is 146. And before that, we saw the highest peak in 2007, which was 149. So if you compare it with 2007 peak, it was the market cap to GDP was 149%, and recently in September 2024, we saw it 146. Now it has declined to almost 120 odd, the market cap to GDP. So it's tough to assume that we should be falling below 100, but if it comes, then the history has shown that a strong recovery is seen from those levels. Similarly, this is the entire market cap to GDP. But if you talk about large cap market cap to GDP, small cap and mid cap to GDP, so again, the large cap market cap to GDP is approximately 61% average, and we are at 74. The peak was at 85. The surprising, or the you can say overvaluation part, comes in the mid cap and small cap despite the correction, because the average is 13% and we are at 23. The market cap to GDP I'm talking about, and small cap is 11% and we are at 23. So while the shift or the re-rating always happens, but this data just shows that still the mid caps and small caps as compared to large caps are clearly overvalued, or there is some froth still left, at least from this data it shows. Now, again, some more slides and some more data driven. As I told you, probably if you want to make strategic moves in 2025-26, you need to be knowledgeable, you need to be informed as to what's going on. So some more information, all thanks to these AMCs who give us these wonderful slides and data and to share with you all. So the P, the price to earning ratio for all the companies in the BSE all cap. So this is the current situation as we speak in March 2025 compared to the peak, market peak, which is highlighted in red. So below 10, the P ratio below 10, which is considered to be healthy. Obviously, there are a lot of other parameters which you need to consider. But as we speak now, we are at 110. Earlier, we were at 64. Now, between 10 to 15, we are at 110. Earlier, we were 60, which means that because the markets at peak, the share prices at peak, the prices were high, the earnings were low, and that is why the P ratio between 10 to 15 or 15 to 20, the numbers were less. But now, as we speak, for long-term investors, as we get better PE stocks, it is good for long-term investing. So we see between 20 to 25. Earlier they were 100 earlier they were 90. Now after the market correction, we have approximately 110 stocks which have PE between 20 to 25, and so on and so forth. And approximately 87 odd stocks are there with the negative PEs, which means that they are actually having negative earnings. So probably the PE ratio is in negative. That is what it denotes. So overall, the market sense gives us an opportunity that whenever there is a correction, whenever Mr. Market corrects, there's an opportunity to buy quality stocks at a decent PE for long-term investing purposes. So again, a busy slide, but simple ratio or simple maths here is that whenever the index corrects by say 10, 15, 20%, so it's almost corrected by 15, 20%, the P ratio, the P also corrects accordingly, like by 19, 20 odd percent, but the EPS, the earnings per share, does not correct that much, which means there has been a downgrade in the earnings, in the corporate earnings from last quarter compared to the previous quarter, but it has not been as sharp a downfall as the prices have dipped down, which means it gives us a good opportunity, and the overall PE ratio becomes more favorable from a long-term investing standpoint of view. So this slide again just denotes that the large cap are basically more favorable as compared to mid cap and small cap from a PE standpoint of view, because the Nifty PE average is 20.5. We are at 18.6 or 20 as we record this video. By the end of Feb, we were at 18.6. Maybe now, because the markets have recovered by 3, 4, 5%, so we are at still 20 approximately at average. So it gives us a good decent entry point. Whereas the mid cap 100, the average is 22.3. We are approximately 27, 28. The small cap 100p is 16.1. We are at 20, 21. So there are still concerns as far as the historical or the average P for mid cap and small caps are concerned, and that is where the investors need to be very, very cautious in terms of deploying their money in the small cap and mid cap space, because that has been the trend from the last 3 to 5 years, that whenever there is a dip in small cap and mid caps, it has rebounded sharply. But is history going to repeat as far as the share prices are concerned, or we should look at the long-term averages and look at PE ratios and then take a prudent decision? That is what you as an investor need to decide. So again, interesting data from the inflows from DIs and FIs. So FIs, that's the foreign institutional investors, they have been continuously selling, barring the December month where we saw a small recovery there. Otherwise, on a month-to-month basis, there have been selling from say October, November, December they bought something, January, Feb, March, as we close, probably they would be net sellers, it seems. while DIs have been straight. It's a straight run up where they have on a month-on-month basis from August 2023 till Feb 2024 and maybe till Feb 2025 and maybe March 2025 also, they are straight only buying and buying. Similarly, on a yearly basis, if you see the institutional flows from calendar year 21 onwards, that's post Corona. First year, it was an inflow. From 2022 calendar year, it was an outflow. 2023, it was an inflow. 2024, and as we record this video in 2025, it's been a net outflow. So approximately 6.4 $6.4 billion have been gone out from India. It's approximately we're talking about close to $6.4 billion. So similarly, in DIS, the yearly inflow from calendar year 21 is straight run up, and calendar year 24, that's the last year when they were net sellers, we bought to the tune of $62.9 billion. So total inflow of $127 billion. So that is where you could imagine, or you can imagine why the markets actually shot up in 2024 or 2023, because we saw a rally or a participation from FIs as well as DIs. So whenever FIs and DIs are net buyers, you can see a sharp rally in the equity markets. Is calendar year 2025 going to be turning net positive for FIs as well as DIs, and can we see a sharp rally again, or is it going to be calendar year 26? The time is only going to tell. But what you as an investor are supposed to be doing is making these strategies for 2025 2026. Simple strategies like asset allocation, how much in stocks, how much in bonds, how much in cash, how much in alternatives, plus also looking at your tax situations, goals, short term, mid term, long term, risk tolerance. You should know what's your risk profile, what's your time horizon, and probably plan for the unexpected by buying the right adequate insurances and keeping some emergency funds. So probably a tailored portfolio which you'll have to make depending on your own situations. Similarly, probably if you have an advisor, it's time to sit down with yourself and your advisor, probably do a strategic review of the entire portfolio, take action timely, do review, do the right balance, rebalancing, restructuring of a portfolio, feel good about it, be in a happy mood, think positive, think about new cash flow strategies, short term, mid term, long term. How can you actually, from your skills, you can actually develop new cash, deploy it in the markets, and make you can say kind of running cash flows for your own future self. Educate yourself, because that's the best investment which you can do at your level, and probably then do make the right investment decisions. So something like that, you can make a sheet where when did you do your last portfolio review, what was your risk tolerance then, now, what was the allocation then, now, what are your financial goals then and now, and probably what were the adjustments which you did looking at the market conditions and these parameters. So some journal like this, or some you can say maintenance of portfolio reviews like this will help. Now, there are two big questions before we leave you for a food for thought. One is the physical wealth, that are you going to be dancing at your 80th birthday, which means are you taking care of your physical well-being? And second is your financial well-being, which is how much is enough. So have you saved enough? Have you invested enough? So that's the big question. So these are two thoughts which we'll be leaving you with as you start financial year 2025-2026. We wish you, your family, your near dear ones a very, very happy, fruitful financial year 2025-26. In case you need any assistance, any discussion, anything which you feel which you want to discuss with us, you can leave a comment, you can contact us on these given numbers. We'll be happy to discuss on a one-to-one basis. You can also schedule a strategy call with our wealth experts, and we'll be happy to discuss on a one-to-one basis for financial year 2025-2026 what should be the strategies going forward. And to answer this big question, what is the definition of enough? And probably we'd like to hear it from you as well, that what's the definition of enough? What is that good golden figure mark, that if you achieve that figure, you can actually achieve financial freedom, you can actually sit back and relax and eat and drink and relax and enjoy from that enough figure. So we'll be looking forward for some comments, some discussions on the comment section, and also on a one-to-one basis. Till then, thank you so much, and Jai Hind. Namaskar.